Welcome to second video or part 2 of the video where we'll be discussing about dollar index and its components. What are the components we discuss? We discuss Euro USD, which is the first component. The second component is the GBP USD. Third one is the USD-JPY. And lastly, we discuss about USD INR, though it is not part of the dollar index. Before we go into that, as always in every video, we say that dollar index and Euro USD and GBP USD has inverse relationship, which means these two, if it goes down, dollar index will go up, or if these two goes up, dollar index will go down. So hence it has an inverse relationship. With that understanding, of course, USD-JPY is a direct relationship. With that understanding, let's go into the analysis part of it. Dollar index 103.859 flat. See, mostly these indices will remain flat, 0.3% down. Euro USD 1.0818, 0.4% up. GBP USD 1.2679, 0.6% up this week. USD JPY 0.2% up, 150.50. USD INR 82.859, 0.2% down this week. So in the monthly chart, what is dollar index doing? Dollar index, what is doing in the monthly chart, it has formed a spinning top type candle. So a slight body, small body is visible. However, at the end of the month, another 4 days is there, we expect it to form a kind of a doji, or the body will even shrink further. That is what we expect. Why? Because Euro USD and GBP USD has formed a doji after a significant downward. On the downward side, it has formed a doji, which means Euro USD is gaining strength and the selling is arrested, and same is the case with the GBP USD. Selling is arrested, which reflects in strength in these two indices, which reflects in weakness in dollar index. So dollar index in the weekly chart, last week I said that it has formed a doji. This week it followed it up. You can call it as a bullish Harame or bullish engulf, whatever way one wants to call, with a long lower leg, due to Euro USD and GBP USD forming solid green candle on the upward side with a slight upper wick, while GBP forming a solid green candle with a very small wick. That means there is strength in these two, which reflects in weakness. This is a simple reverse relationship, I said, right? So what is happening in the daily chart? Dollar index is significantly down. So overall, now dollar index is above, is below the 100-week and 100-day simple moving average. Otherwise, it is above all the other indices, all the other levels. That is simple moving averages in monthly and exponential moving average in monthly charts. So overall, dollar index, we expect it to close around the same level and form a doji. As far as USD-JPY is concerned, in the monthly chart, last month it formed a solid green candle. This month it is following up with yet another solid green candle with a continuation pattern. So in the weekly chart also, it is significantly going up, slowly but steadily rising. It's like a steps, it is going up nicely. In the daily chart also, it is going up, though it came down near the expansion. Typically in a strong up move, this is what will happen. It will touch right along the Bollinger upper band, then come near the exponential moving average, take support, and then once again bounce and move. So it's like what you call trapping all the shorts at that level. If somebody is smart, they might short there and close their position here and go long here. All those things professional traders will do, but not for everyone. But overall, USD-JPY is in a strong wicket, which is why dollar index still has some strength, and the levels of 100, it will not break below. That is what we have been maintaining for quite some time. Also, one more important point to note is dollar USD-JPY, it is going to break the last year's high probably next month. In March, we can see that breaking the next month's high, because technically it is looking that way. As far as USD INR goes, we have been telling since August 2023 that it is forming a rounding top in both weekly and monthly, and it is going on a very narrow range. This week also it has formed a solid red candle, but what is happening is the 200-day simple moving average and exponential moving average, 200 day in the daily basis. It is now near the Bollinger lower band. It has formed a long inverted hammer with a basically inverted hammer with a very big upper wick, which means there is going to be a powerful reversal on the upward side. It is going to come because it is near the key support levels of 200 day simple moving average. So hence bulls will come and provide support here, which will take it up, and hence now we expect some more sideways, which is basically a consolidation, after which a breakout, a significant breakout on the upward side is going to happen. So that is what overall we see in this. And thank you very much. In part 3 of the video, we'll be discussing about US 10-year Treasury yield, Brent and NYMEX.